Hi everyone, my name is Lena Casanos and I will be moderating today's webinar. I will begin by introducing the Southwest Capital Pathways program. Then I will introduce myself and give the word to our guest speaker, Blake Quesenberry, business advisor and CPA, who will introduce himself and take us through a presentation on small business tax fundamentals. Feel free to ask any questions through the chat function throughout the presentation. We will be responding to them as we go. The questions that we cannot respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will share recording and slides of this webinar afterwards. So, what is the Southwest Capital Pathways program? It is a program that was founded by the U.S. Treasury SSBCI initiative and is sponsored by the Virginia Department of Small Business and Supplier Diversity and hosted by the Virginia SBDC and George Mason University. We can start with our program overview, then we will go through the program eligibility and finalize with its services. Capital Pathways is a no-cost specialized SBDC program that helps small businesses and nonprofits build the systems and habits needed to become capital ready. Why does it matter? Being capital ready matters because those less prepared self-select out or fail applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity. Only half of requested amounts reach small businesses. And to put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who apply for loans actually get their loans approved. So, Capital Pathways creates a path to financial readiness. Our program offers an immersive hands-on group experience paired with one-on-one support. Who is eligible? Very small businesses and nonprofits at any stage facing challenges accessing traditional financing. The services that we provide include financial skills and tools and loan application readiness. We start with an intake with a regional SBDC director that pinpoints your business key gaps so we can connect you with the right tailored resources either through our Capital Pathways program or other resources that can help. We also offer financial webinars on topics including financial basics, financial statement preparation, accounting, software training, and like today's small business and nonprofit taxes. Although today's is going to be focused on small business taxes. Another one of our offerings include one-on-one individualized, this is the financial webinars that we offer. Another one of our offerings includes one-on-one individualized and tailored support on business foundations, profitability and pricing, financial forecasting, tax readiness and compliance, financial statements and tools, financing options, loan readiness, and lender prep. Finally, our loan application readiness services include both webinars and one-on-one individualized support. The webinars are on topics such as what lenders look for in loan applications and SBA loan options. We have a partnership with a lender that provides one-on-one support to those looking for capital. So, how to get started? You can get started, and if you are interested in getting started for one-on-one advising, you may reach out through our email at swcapitalpathways@brceda.org. I will also include that email into our chat so you have it for reference. Now over to introductions. As mentioned before, my name is Lena Castanos and I am today's moderator. I have a professional background in economic development, small business support, and access to finance projects domestically and internationally. I am currently both a program lead and a business advisor in the Capital Pathways program. Today's session will consist of a 60-minute presentation. Again, feel free to ask any questions throughout the presentation via the chat function. We will be responding to them as we go. We will also leave some room for questions in the end. The questions that we cannot respond to in this webinar, we can address through our no-cost one-on-one services or connect you to resources that can help. We will share a recording and slides of this webinar afterwards. Now I will give it over to Blake to introduce himself and take us through the presentation.
Thank you, Lena. Like she said, I'm Blake, CPA, run a little firm out of Bristol, Virginia, and this is what I do. This is what I was ecstatic to be approached for this program because I help small businesses kind of go from 0 to 60, if you will, as quickly as possible from a compliance standpoint. Because I find that the success of the business kind of hinges upon that foundation and that initial structure. So thanks, Lena. Thanks to Cindy who got me started here and everybody else that's been helping. So I'm super excited about this. So small business tax fundamentals. This reaches a little bit further than just tax. So if I could revise this a little bit, I would call this small business compliance fundamentals. Yeah, so that's what we're going to talk about today. Thank you all for showing up to talk about taxes. I know that's not the glowing goal for every Monday morning, but thanks for being here with us. So you're going to hear me talk a lot about checklists today, developing your compliance checklist as a small business owner, and this agenda here looks a little bit like what your checklist should look like as a small business owner. You're going to deal with local taxes, state taxes, unemployment taxes, taxes that are specific to your industry that nobody else has to deal with. You're going to deal with all kinds of acronyms, numbers, things like that. So I'm not going to list all these off here, but again, we're going to start working toward developing your compliance checklist. A quick little kind of disclaimer here. As Lena said, this is a program that we're working one-on-one with small business owners. So this is going to be more of a surface level, high level overview of this stuff, and in a lot of cases, probably won't provide you with the means to actually make a tax filing, but should at least start to get these things kind of churning through your mind as far as what you need to do to stay compliant. So as we go through this, if you have any specific questions, please. I know Lena included the email somewhere, but I put a little snip here with the link to where you can get started with this program if you deem that beneficial to you. So I would personally be happy to help you out one-on-one, get our hands dirty, and get some of this stuff done. So again, we're going to talk about checklists. Develop a plan of attack to make sure that you're in compliance from a local, state, and federal level. Okay. And a huge component of this is making sure that the information that is flowing into these filings is accurate. And to make sure that they are accurate, you have to have systems in place that track that information. The way a lot of this works, especially at the state and federal level, is that um, if there's something that's missed, if there's something that's inaccurate that the state or the government or the federal government catches before you do, they may not actually reach out to you until it gets to a point that you know, maybe turns into something a little bit larger. So again, it's very important that we up front establish these systems, establish these processes so that we can rely on the numbers that are flowing through to these tax filings. And a huge component of that, and I talk about this anytime that I have the opportunity to as an accountant, is a big component is separation of business and personal operations. Okay. And that includes credit cards. And this becomes drastically more important if you run an LLC. Okay. A lawyer may have something to say about this, but from my perspective, you don't have an LLC if you don't have an LLC bank account. You don't have that liability protection. And again, it just makes it so much more difficult and cumbersome for you to make all of these tax filings if you have to, spend a lot of time up front tracking down the numbers and the information. So again, I can't say this enough. Let's develop the processes so that the information is accurate up front. So best case scenario for that is to get yourself set up on a dedicated accounting software, such as we've all heard of QuickBooks. Um, I understand that starting out, that isn't doable for some folks, but if you can swing it, I think that you'll find that this is really going to set your business up for success. Again, getting the software set up, making the investment, and getting these information systems in place. And Excel spreadsheets can work too. So this would be a great thing for you and I to get together and work up an Excel spreadsheet if you're not quite ready for QuickBooks. Work up an Excel spreadsheet that you can do a basic bank reconciliation, track your profit and loss that way. I do that for some of my clients. And we're going to start with local compliance and work our way out. I know that many, a lot of business owners find it daunting to start a business, and they kind of get turned away, or they spend a lot of time spinning wheels trying to figure this stuff out. So we're going to start with the layups, which I call local compliance, and we're going to work our way out. Okay, and make this something that's doable for business owners, especially those that are just starting out. Local taxes, towns, cities, and counties. Um, this one is a difficult one to pin down in a webinar because we could have a huge matrix of data that gives each compliance thing for each town, city, and county and the related rates. They are generally they kind of float around the same area as far as rates go, but but they differ everywhere. So my recommendation to you, if you haven't already, go ahead and get in touch with your town office, county office, and establish a point of contact there and just see specific to your industry um, what the boxes that you have to check for them. One of these is annual business licensure that most towns and cities especially will require. And some of these are just flat fees. Some of them start with a flat fee and then compound based on your gross receipts. And again, this varies by industry. Um, and they can change fairly frequently as well. I know that some places have food truck rates that are different from restaurant rates. So again, your best option here is to get in touch with um, some establish a contact in your locality. Meals tax, if you are in that sort of industry, food truck, restaurant, you're probably going to have to file meals tax monthly. So make sure that that process is in place. And we're going to talk a little bit more about meals tax here in just a second. And business tangible personal property tax, usually an annual tax, and in a lot of way mirrors the the tax that we all love, which is personal property tax. It works in a somewhat similar way that they will send you a form usually that allows you to itemize the furniture, computers, things like that that you use on the day to day in your business. and they'll usually just apply a reasonably low rate based on the total value of those items that you report. So we're going to drill into meals tax a little bit here. And the big difference and the big line that we want to look at is prepared food versus packaged food. And the oversimplification of it, of course, is restaurant versus grocery store. Now we know that there are many different types of restaurants. We mentioned food trucks. Um, Anything that is meant to be consumed on a premises or in a certain atmosphere, you can bet is subject to meals tax. You have gray areas like bakeries where they do a little bit of both, as you can imagine. So the issue here is, okay, where do we draw the line between prepared food and prepackaged food? All right. Just a couple of examples here. Um, Generally, and this isn't a blanket assumption, but generally counties are a little bit cheaper in meals tax, and as you can see, the larger cities push it up a little bit. But generally, your meals tax rates here are going to fall around this range, and you should have the option, assuming that you have a point of sale system for for your restaurant food truck, if you're in this industry. um, you should have an option to select your locality. And a lot of times your point of sale system will actually generate the rate that's applicable to your locality. And then it just becomes an in and out liability. So just like sales tax, which we're going to talk a little bit more about, meals tax is not, when you collect that from a customer, that is not revenue. That's not your money. So as soon as it comes in every month, it needs to go right back out. And your point of sale system should track that perfectly. Um, this, if it looks a little chat GPT coded, that's because it is. This one I had to do a little bit of um, a phone a friend a little bit with this one because again, this there's no shortage of compliance boxes to check, especially when you start drilling down into different industries. So as you can see here, we talked about business licenses here um, at the top there. Tangible personal property, real estate tax. If you own your office, um, if in the course of your business you own any real estate, that's going to be subject to real estate tax, usually taxed biannually. That's another caveat to all of this is that, a lot of these items are taxed on a different frequency, right? Real estate tax normally um, taxed on a biannual basis based on the value of the property. Again, meals tax, lodging tax. If you run an Airbnb, if you run a boutique hotel or anything like that, you are going to be subject to lodging tax. That's not an industry that I've worked with personally, so I I don't know the frequency, but if you're in this sort of business, then I would definitely reach out to your locality and see if you're subject to that. Cigarette tax. Now, this is not a blanket tobacco tax. I believe there is one of those for the state on the state level. You guys can correct me if I'm wrong. Um, but this is a specific cigarette tax. So if you have like a boutique grocery store in your local downtown or something like that, and you sell cigarettes, that's another box that I'm sure if you're in that industry, you've already looked into that. But if you haven't, reach out to your locality if you're subject to that. Machinery and tools tax. That is specific to think processing, manufacturing. um, large businesses that run out of a production facility, the related machinery to those operations are subject to most of the time, not that there aren't exemptions depending on where you are, but usually subject to a tax on those on that equipment. Utility and communications. This is for folks if you're driving, I'm sure that some of you live in rural areas like I do, and I drive around and I see the independent fiber providers, things like that. Those are subject to a utility and communications tax. That can be taxed at the local level, but is mostly centralized for the state. Now we'll look at the state interface here in just a few minutes. Actually, right now. And as we go into this, I just want to say any of the state folks who have anything to add, feel free to drop into the chat here because I've pulled this from my personal business's interface, and there's a lot of stuff that I'm not subject to. For example, I'm not subject to sales tax. So anything here that you guys want to add as far as navigating um, this interface here, please feel free to do so. So this is going to kind of be your home base once we get to the state level. Okay. And we're under the assumption here that everybody's in Virginia. So I'm not going to speak too much about any other states. This is going to kind of be home plate for you. So as you can see here, if you haven't been to this URL up here in the top left, um, take that down and maybe pay it a visit and register your business. And as you go through, you register, you're going to be fed first into this tax section here that I've got highlighted. And your account number is going to become your EIN number, assuming that you have one, and we'll talk about that a little bit later on. And you'll be prompted to set up your user ID and password. And once you get there, your interface is going to look a little bit like this. This little box here on the left. And if you haven't set yourself up with any taxes through the state, I always have to remind myself when I'm working with the client here, this add new tax type is where you're going to go. And I'm assuming that a lot of you folks are subject to sales tax. I hope that you're already making that remittance on a monthly basis, or if you're assigned another frequency, I hope you're taking care of that. And again, I'm not subject to sales tax, so my interface looks a little bit different. But if I'm not mistaken, sales tax will go up here right in this top section, and you'll have it right there in front of you to go in and get that taken care of on a monthly basis. So who is subject to sales and use tax? Um, Anybody that sells tangible personal property, anybody that sells tangible software items, of course, like USB, CDs, and things like that, but also anything that's licensed and downloadable. So if, for example, I don't like to use QuickBooks Desktop, but when I do use it, I have to get a license and I have to download it. So if it's a single, almost a little bit more tangible piece of software like that, that's also subject to sales tax. Fabrication labor, that means a product that is transformed and returned, if you will. So if you're a woodworker, somebody brings you a big piece of lumber and they say, I want you to turn this into a duck. And you turn that into a duck and you return that to them and you charge them for it. That's a sale. So that little bit of gray area there seems like maybe it would be a service-based task, but that is actually a product sale that is subject to sales tax. And installation labor when grouped with the product sold. So HVAC company, for example, um, sells and installs heat pumps. If the heat pump and the labor are not separated out on the invoice, if you just say heat pump on the invoice and you were to get audited down the road, that entire amount would probably get hit for sales tax. So want to be careful with that. If you're selling a product and there's labor involved, you just want to make sure that on all of your invoices that those are itemized as well as possible. Use tax, this is not certainly not my forte. I don't deal with this a lot, but I view use tax as the state's way of preventing folks from purchasing everything outside of the state just to avoid the sales tax. So in the course of your business, if you're purchasing things and using things from out of state, you should pay use tax on those. And again, anybody from the state, if there's more to add on things like that, just feel free to chime in. Um, I almost look at it as when you're filing your personal return and they ask you if you've purchased anything and didn't pay sales tax on it. It's just kind of the last Hail Mary to see if we can make sure all of that sales tax gets captured. And again, separately stated installation is not subject to sales tax. Professional services, kind of like what I do, consulting, marketing, accounting, legal services, not subject to sales tax. Real property improvements, um, house flippers, things like that, not subject to sales tax. I can tell you from experience, they get hit plenty hard on sales tax in purchasing the materials. So they are not subject to state sales tax. And this is just a little my my best effort at getting again ChatGPT to give me this interface because I don't actually have one myself. Didn't really want to go in and poke around on a client's sales tax interface to get this. So some of these are out of line, but this is generally what it's going to look like when you actually fill out and file your sales tax on a monthly basis. It's for most people, it's pretty simple. Gross general sales, fill out there in the top left. Anything included in that that's exempt, like labor, break it out here to the right. Most folks aren't subject to the qualifying food and personal hygiene. I know that's a question I get a lot from folks that are in the restaurant industry and things like that. Um, this gross qualifying food and hygiene, that is my understanding is that that's groceries, basically. So don't get tripped up on that if you're in the food industry. If you're, again, prepared food, you're not going to be subject to that. And then here on the right, uh, pretty simple. It's going to take what you put into the previous screen, and it's just going to tell you how much you owe. It's an extremely simple process once you get going on it. State income tax withholding. Um, this is a big one, and I've run into this one. I'm on the border of Tennessee and Virginia, so Tennessee being a state that's not subject to sales tax, we have a lot of folks that I guess come over into Virginia and are really bummed out when they work in Virginia. They're really bummed out when they realize they've got to pay state income taxes on the work done in Virginia. Um, so the general rule here, you must withhold income tax of the state where the employee works. So somebody works remotely, they never come into the office, they're in a different state, they're subject to the state income tax of the state that they live in and work in. Okay. And you are required, technically, to set up withholding within your payroll software to compensate for where they live. Okay. So if you got folks working in a bunch of different states, payroll process gets a little bit more fun. Just a little overview here of kind of similar what we did with the sales tax. This is how you're going to set your once you hire employees, this is how you're going to set yourself up to withhold and remit taxes for those employees. So again, add new tax type. You're going to be when you're setting up your business, especially depending on your industry, you're going to be hitting that button quite a bit. Okay. So this is only applicable obviously for employers. If you have maybe a sales tax account, you don't have any employees, you don't need to worry about this. But once you start that process, once you report to the state that you have employees and that you have state withholding, even if that liability drops to zero, even if maybe that individual doesn't stay with you, or you just don't have any wage liability at all, you still have to let the state know on a monthly basis, usually, how many wages you've paid out. Okay. So even if it's zero, you got to keep making those filings. Those are called VA fives. And just a little snippet there of how to do that. If you run payroll in QuickBooks, it's kind of a shot in the dark whether or not they're going to continue making those filings for you. Okay. So if that doesn't happen, you're going to get a letter from the state, and after a few months, and you're going to get hit with I think it's a $10 fee for every month that you haven't filed. So again, even if you have employees that come and go from the state of Virginia or in the state of Virginia, and you don't have any wages to report, once you've done it, once you've started it, you got to keep reporting it. And it's very simple, and this is where you do it. Unemployment tax on the state level. Um, this is this is one when I set up my clients, again, this becomes very uh, having an accounting software, a payroll software becomes very valuable here. Okay. Because these kinds of things will be calculated and remitted and filed automatically if you choose to set it up that way. Even if you don't choose to file it automatically, you can set it up to where you'll be prompted, you can review it, and then you can send it through. Um, so anybody that comes to me wanting to file this manually, we can and we can figure it out, and I would love to help any of you with that. But generally, we try our best to get folks set up on a reliable payroll software to handle these little one-off things here, so they kind of become a non-factor. Okay, and this is going to kind of be a similar but separate interface from your tax interface when you get into the state website. The last individual that I worked with on this, after we set up the employee withholding, it immediately prompted us to go ahead and register with the VEC, okay, the Virginia Employment Commission. If the state deems you liable for an unemployment tax, you will be issued a 10-digit VEC account number. So if you go in there and you say, "Hey, I'm just going to pay out $300 this quarter," we haven't had to pay anything into state unemployment before, the state might let you know that you're not subject to it yet. Now, if you continue with that, they'll probably say otherwise, but um, it could be a few months of operation with your employees before you actually become liable for this state unemployment tax. So this is kind of what it looks like. Again, you've seen this login here. So as opposed to the tax section, we're going to go to the VEC section over here. And you're going to use that number that they issued you if they deem you liable for state unemployment tax. And that rate, what it varies. So depending on the wages you pay out, the number of employees, what you actually owe in unemployment tax is going to vary. And certain industries are more, as you can imagine, construction industry, industries with higher turnover, things like that. You're going to get hit with a little bit higher unemployment tax. Okay. And again, if the state tells you that you're not liable for unemployment tax, just keep an eye on your payroll software because it's probably still going to try to file and pay it. Um, that's just a little um, convenience slash not convenience that QuickBooks deals with, and you might have to deal with for a few months until the state actually deems you liable for it. But it'll be really nice to have it once you are liable. Okay. So again, industry specific boxes to check here. Okay. I have not dealt with most of these. Of course, we deal with sales tax. Of course, we deal with employer withholding. I've done a little bit with vending machine, soft drink tax, but for the most part, these are very industry specific. And for me to help you with this, I'd be happy to. We could look at it together and figure it out. Most of these filings kind of mirror that same um, sales tax entry. It's mostly just entering in a a gross amount and seeing and letting the state calculate it for you. And again, if you have these information systems in place, which we hope you do, you'll be able to itemize these sales easily and get that information easily. So this can look very cumbersome, um, but if you have the processes in place, I would recommend focusing on those processes and making sure that this stuff here just becomes a box that you check every month. Um, yeah, as we said before, the communications tax, I doubt that any of you are subject to that, but yeah, that's a state tax. Um, yeah, no shortage of boxes to check here. Let's talk about the difference between really a difference between W-2 employees and 1099 employees first, before we get into how they're taxed. If general rule, if you tell your employee when they have to be at work on a regular basis, and if they use your equipment and you tell them, hey, this is your job, you work for us. They're a W-2 employee. Um, that's a big point of contention, especially when it comes to payroll taxes. We'll talk about payroll taxes here in a few minutes. But you want to make sure that you have those employees classified properly. The burden of proof is a little bit heavier on the 1099 contractors. So if there's gray area, then regulatory bodies are going to classify employees as W-2 when in doubt. Okay. So if you're going to operate with employees on a 1099 basis, just make sure that that's what they really are. Uh, so as you all know, I'm sure everybody's here has had a W-2 job. Um, the stuff is withheld for you by your employer. So as the employer, um, you're going to withhold that for them, remit it to the state, remit it federally, and you are going to be subject to half of FICA. Um, FICA and self-employment tax in my brain are a little bit interchangeable. It's just which bucket are you in? If you're a 1099 contractor, we're talking about self-employment tax. If you're W-2, we're talking about FICA. So that is something to think about. When you start to take on employees, understand that whatever you pay them, um, budget in another 7.5%. All right. When you're budgeting how much you can pay your employees, go ahead and budget in that extra 7.5%. because you are going to be paying it. Um, and again, it's up to you to handle the payroll tax filings. They do their individual tax filings, you handle the payroll filings. So self-employment tax on 1099 contractors. Again, if somebody brings their own tools to work, if they kind of show up when they want, if they are taking on other jobs and working for other people in a similar industry, those that sounds to me more like a 1099 contractor. So just make sure that you can prove that out if you ever need to. You don't have to withhold anything from them unless they don't pay their taxes. If they don't pay their taxes and you send them 1099s, then you are going to get letters requesting that you withhold their taxes for them. And for the folks that I've seen, that's a pretty big splitting point for a lot of employers and 1099 contractors is that once those withholdings start happening, tends to sour a little bit. Okay, so if you have contractors, just make sure that you file the 1099s, make sure that the 1099s are complete, make sure that you get W9s. I wish I would have put this in here. Um, Make sure you get W9s, the information about the contractor up front before you start working with them. Um, because if you don't and they don't pay their taxes, then they could put some blame on you. So make sure that you're receiving W9s, make sure that you're sending out 1099s. And again, we're going to self-employment tax interchangeable with FICA, just depending on the bucket. So in this bucket, we're talking about self-employment tax, which is just the total amount of FICA, which is 15.3%. So the contractor is subject to that entire 15.3%. You don't owe, as the employer, any payroll taxes there. Quarterly estimated payments, you might get questions from your contractors. Of course, you're not supposed to, I guess, give tax advice to your employees. I struggle with that myself, but contractors are expected to make quarterly estimated payments. And you usually, as a business owner, are expected to make quarterly estimated payments. Now, if you don't have any liability from the prior year to base that on, and you're not sure if you're going to make any money or show a profit in the coming year, you're okay. You don't need to make those payments. But once, especially, you have a liability from the prior year to base it on, you got to start making those quarterly estimated payments. And um, you want to try to pay 100% of that last year's liability in quarterly estimated payments. Um, it's kind of a shot in the dark whether or not uh, these penalties are actually going to be assessed. But again, if if the regulatory body catches it before you do, uh, they might not say anything about it for a while until it gets to a point that it's worth tracking down. So you want to make sure that you don't leave any room for penalties and interest to start accruing because that can be a small business killer. Okay. Employer identification numbers or EIN. I'll just go ahead and spoil this slide for you. If you are an LLC, you probably need to go ahead and get an EIN. Because again, as we discussed, as an LLC, um, if you don't have a separate bank account for your business operations, then you don't really have that liability protection. You don't have the arm's length separation that you need. Um, you're also going to need it if you hire employees, even as a sole proprietor. Okay. So you'll still, as a sole proprietor, you still file taxes under your social. Um, but you'll need that EIN number to remit these payroll taxes that we've been discussing. Um, if you open up a partnership or a multi-member LLC, of course, you're going to need an EIN because that will kind of take the place of your social. So that EIN will then represent the members of the business. So again, want to keep everything arm's length. If you elect S Corp or C Corp status, of course, yeah, you're going to need an EIN. Um, and again, can't stress enough, open up a business bank account. The bank is going to want your articles of incorporation, and they're also going to want your EIN. So you can't set up an LLC bank account unless you have an EIN. So you're not technically required to have an EIN as an LLC, but um, effectively, in my opinion, again, you don't have an LLC unless you have a separate bank account. All right. And you're going to need that EIN to open up that bank account. We'll talk a little bit, with lenders and vendors, these kinds of structures, and since we're working with capital pathways here, and um, we want small businesses to have access to funding, EINs, things like this, these compliance boxes that we're checking, um, add legitimacy to that. These How your business is structured depend could make the determination of whether you're able to get money in the name of your business. If you're able to take out a loan in the name of your business, that's a lot more desirable than taking out a loan personally and then funneling that into the business. If possible, if you can secure funding through your business as an LLC or this separate entity, that is always going to be more desirable as long as the terms are favorable, as you could imagine. So, payroll taxes. I feel like we've kind of already covered this, but this is kind of what a pay stub's going to look like here, right? You got your federal income tax withholdings. It's going to itemize your Social Security and Medicare. That should always be uniform. So if you're running payroll through QuickBooks, QuickBooks actually will not let you edit the Social Security and Medicare amounts, or at least the version I use won't let you um, edit those because those should be standard. And if your calculations don't match on those, then you've got a problem because those should always be uniform with those percentages. All right. Now, your federal income tax and your state income tax, those are fungible, I guess. You can change those, but that should be determined by the W-4 and the VA-4 forms that your employees fill out. Okay. So if you've had folks that started and you never had them fill out a W-4 or a VA-4, I would do that as soon as possible. Because if it comes to the end of the year and their taxes aren't favorable for them, then they can come back and say, hey, well, I never had the opportunity to adjust my withholdings. So yeah, W-4s, VA-4s, big deal. So make sure that those are received for all employees. As the employer, again, you're subject to your half of FICA, which is a combination of Social Security and Medicare, totaling roughly 7.5%. Federal unemployment tax, we're going to touch on that a little bit here in a minute, but effectively, that is offset by your state unemployment. And generally, you're looking at a 0.5% rate, especially for smaller businesses. And you got to file your 941s quarterly. So again, this is similar to the VA-5 that we talked about earlier. Even if your um, wages drop to zero, you've still got to let the regulatory body know that they're still zero. Once you've set up that interface, you got to keep doing that. Now, QuickBooks is a little bit better with still filing those federally. If you don't have any wages, it will continue to make those filings usually. But if you're not in QuickBooks, it's up to you. You got to keep filing those on a quarterly basis. Yeah, so this is how federal unemployment tax is calculated. If you paid $1,500 or more in wages in any quarter, or you had one or more employees working any part of a day in 20 plus weeks during the year. That's a mouthful. And that's why, again, if you run payroll, I really hope you have a payroll software because I certainly wouldn't want to be calculating these myself and doing this manually. 6% on the first $7,000 capped at $7,000 of each employee's wages. And again, um, you receive some help federally from the state side. So effective rate usually is 0.5%. Form 940, similar, similar to the 941, but this is due annually. Okay. Um, if your liability is under $500 for the year, you can just make your federal unemployment tax payment when you file the 940. This is an employer only. This doesn't have this, your employees don't have to worry about this. Okay. So big picture here, this certainly doesn't get it all. Make sure that your information systems are in place. All right, because these things become a lot more cumbersome as um, you get through them and you got to go back through the bank. If you're spending your time peeling through your bank statements and things like that before you make these filings, it's much more likely that it doesn't get done and it's taking time away from you growing your business like only you can do. So um, please make sure that these information systems are in place so that these filings can work out for you. Use a dedicated accounting software if possible. Start locally, work your way out, establish contacts locally, call the state if you have questions. I've had only good experiences reaching out to the state about sales tax if we have a problem setting up the account or anything like that. They're much more easy to get a hold of than the IRS. So yeah, I think the state is a great resource. So call them if you have any questions about your state filings. And understand your payroll tax liabilities, of course, because that is the one that if you let it go and you were to get audited and you were to get hit with back taxes on payroll tax, that stacks up quickly, exponentially. So if you have employees, again, try to use that dedicated software and understand the liabilities. So there's a little payroll tax section in QuickBooks. I try to review that as much as possible for my clients. So make sure that's taken care of. Just some websites here. Really, the tax website and the VEC website are probably going to route you to the same place ultimately as a business owner. Um, and again, Lena dropped in the chat the link to get booked with her on her calendar. So I would encourage that if you find the need for it.
Yes, Blake, thank you so much. I would like to encourage participants to ask questions. We have not received any questions, so I encourage people not to be shy. We'll wait a few minutes until the end of the hour for your questions. Please drop them in the chat. In the meantime, while you can think of a question or two that you may have, I would like to remind everybody that if you are interested in one-on-one advising support, individualized advising support, feel free to reach out to us through the email that I put in the link if you're in the Southwest region, or our website if you are outside of the Southwest region. We offer in the Southwest region in-person advising as well. Our statewide program only offers remote advising. So I encourage people here to send an email with their interest, and we can go from there through the intake process. And also, really thank Blake for his time today. Great presentation. I think we all learned quite a lot. So thank you so much, Blake, for your time.
Thank you.
Um, Wonderful. I see someone asking for an email. I'll drop it right now in the group chat. Yes, I see someone asking if there's a replay link. Yes, you will get in your email the recording of this presentation as well as the slides. Any tax specific questions that you may all have? Since we've got a CPA, no cost CPA for you all. Um, What about a new business that is not yet profitable enough to pay the sole worker anything? If the worker is the single party LLC operator, any tax liability or tax filing obligations?
Assuming no employees, no, other than just the filing fees for the LLC. If you show it depends. If you show a profit, then yeah, you're gonna owe on that. But if you don't show a profit, you shouldn't owe anything. You're welcome. Now, if you just because you don't pay yourself, um, if you've got money, if you have made money as a business and you that's a net profit, then yeah, you will be even if you haven't paid yourself. So the actual movement of the money doesn't matter. You're going to be taxed on the net income of your business. You're welcome.
Maybe we can wait one more minute, Blake, in case anyone has any other last minute questions.
Sure.
Well, in the case that we don't have more last minute questions, I do wish everyone a very wonderful December holiday month. We also have another webinar that I will drop in the chat on smart year-end tax moves, strategies to reduce your tax burden before the end of the year. And Blake will be presenting that same chat next week, I believe. So I will drop that link here in the chat in case you're interested in participating. One second, let me find it and I'll drop it in 1 minute. All right, that's it. That's the link to register. Well, I don't see any more questions, and we are at time. Again, Blake's, thank you so much for your time today and for such a fruitful conversation. And I wish everyone in this webinar a wonderful holiday month.
Thanks, Lena.
All right. Goodbye, everybody.